to another Trading Fibs video. This is the final video on the pitchfork study along with new wave theory counts. So we've been using the Andrews pitchfork to help us track our wave counts and direction. So we've been doing NVDA on the 30-minute time frame. Right now I pulled out at the zoomed out to the 4-hour time frame, and want to just try to make this as quick as possible. This is all technical analysis, no fundamentals involved. So we always try to establish 3 waves in our counts. I'm going to show 3 swings here. This is the start of this entire move here, and I was trying to prove that we didn't have to find the initial beginning of the move here. Just try to get in the middle of the move, finding any 2 swings to find our 3rd swing. Just find an A and a B, and then we'll measure with our fibs to get our C and use the pitchfork to help us along the way. Okay. Now we are coming to a top, so I'm trying to pinpoint that as accurate as possible. To do that, I'm going to need to go ahead and get zoomed out to the beginning of the wave. So one thing I wanted to, let's do this. Let's measure these 2, this first swing here. This is going to be our first A wave right here on a bigger degree. So let's get our targets up for that, and I'm going to leave one in particular up because we're past everything else. And we'll leave that one. Okay, so that's up here at 180. Now, to help us along the way when counting waves, the best thing to do is try to count on the smallest time frame possible. So for the next move up, we're going to skip the big move and start counting the internals here. All right. So I've already done this. So one thing I just want you to pay attention to the swings. So I count the fib that the wave ends comes to a head first. Okay, so even though this one lines up, this one hit first. So I'm counting the 161.8, this purple. Okay, so now we have this leg. So let's measure this one. Okay, we got, I don't think that's, there's a 161.8 again. Okay, so we're going to go ahead and count that one. That's our next wave. Let's measure. Now we take that into an addition to get our next one. So we'll start here again. And got another 161.8. So far we measured 3 waves, and they've all hit exactly 161.8. Now let's measure that one in addition with everything else. Okay. Now in this final one, there is not a wave that it has halted to yet. It went through this 161.8, and it looks like it's gonna try to get to the 200. Now the one thing I wanted you to notice is that the 200 and this 300 on a bigger degree are pretty close to each other. So this is probably the final destination for NVDA, at least for this next wave down. So this would be like some kind of primary wave down. Alright, so now let's zoom back into the 30-minute time frame and see how we're moving into that. I gave a couple of scenarios last time on how it might move in regards to the pitchfork, Andrew's pitchfork. So I know I got a lot of lines here. This one's a fib at 300%. This is a fib here at 200%. This is a fib here at 161.8. The purples here are your pitchfork. Here's your low, median, and high. All right. These yellow lines are directional, anticipating price action. So I just drew these in and to simulate how it might move. And this is a video I did on Wednesday. So starting here with these trend lines, I thought maybe it might go up, try to test the top of the pitchfork, and then end the move and start to correct. Well, that one's not in play, so let's take that one out. The other scenario is I thought it might move along the median line until it reaches one of these two targets and then fall down. So this one looks like the one we need to be tracking. So as long as we stay along the median line, it looks like that's where it's going to hold. If it breaks down to either side of the pitchfork, we just need to be looking for breakouts on either side for either a continuation of an uptrend or our correction that I'm anticipating we're looking for. So in the next couple of days, I think we will have our answer. So today is here. Let's extend this out. I think as we get a little closer, it might pop up and then find the correction. So that's my prediction on NVDA, and today is Saturday, July 19th. So this is 30-minute time frame, and our intersection here is at Friday at noon. So I would say we would know at least by then if we're going to go higher or lower. Again, it might happen before that, but I'd say at least by Friday we're going to break out of something. Okay. So let's move to the US dollar Japanese yen spot. That's the other one we've been working on this week. Again, we're going to start out on the 30-minute time frame. This one's interesting because we had started to use we used the shift to start our trend, the regular shift, and you can see it started to break out here. So this is indicating that we are possibly in another wave, okay, in our B wave. So we're gonna switch this to modified shift to help us with the trend on the B wave. Now, let me switch it back real quick. Before, you noticed that we were outside the pitchfork. So this is bearish. Anything below the median is bearish. Anything above it is bearish trend. So with this pitchfork, we're showing bearish momentum. When we switch it to the modified, now we're showing bullish, not only bullish, but almost overbought scenario. So I said also last week that we had this wick come down almost to our 32.8 correction, 38.2 correction, I'm sorry, but it wasn't quite there. So I was thinking that we'd try to retest that, or we go ahead and continue up, retest our top of that pitchfork, the previous one, the shift, and then correct, and then resume higher. And that's what's looking to me like we're forming a triangle right here, and we're going to continue higher. So let me highlight the possible triangle. Okay, and I think we're looking to break out of this. It's possible we could have a false breakdown and then resume higher. I have we're going to switch to the weekly time frame real quick. This is the first time I've showed you the whole picture for this week, but I have a outline of what I think might happen over the course of a few years. So I'd say I think we're in a triangle pattern at the moment overall, and we're looking for a D leg up and then eventually an E leg down that I think I'm looking for it to break down and have some kind of reversal trend down, some kind of like bigger cycle trend fake out, if you will, and then resume to the upside. But that's years down the road. So I just wanted to show you the A, B, C, D, and you can see that we're in a descending triangle. So anything along, the more we consolidate, the lower our short-term target would be. I say short-term, but it's technically, I guess it's long-term, because I'm looking for something in the 150 to 152 area in the next 3 to 4 months. So wanted to show you that first, but and then zoom into the 30-minute time frame. But anyways, here we are. This is the triangle in the 30-minute time frame, and here's the triangle on the weekly up here at the 154. Could have sworn it said 152 on the weekly. Maybe because I'm zoomed in, it's changed the just because I was zoomed in, it could be 154 if we went straight up. But the longer we consolidate within the this range here, 148, 146, then yeah, ultimately our target is lower on this orange trend line. So because I do have an A and a primary count complete, this B wave could extend out for the next month and a half. So I am going to go ahead and slide this over because I'm looking for a B, and I'm also looking for some like a 50% retracement really from here. Now I just said it might break out to the upside, so because this is a rising pennant, I guess they call it a bull flag, so usually those do tend to break to the upside. But if it halts here and breaks to the downside, I'm looking at 145, 146, 145.8, somewhere around there. But we'll come back and get those targets once we start breaking these pitchforks. So I think that's it. Let me take out this because that has happened. The bearish move did not happen. So let's predict this move here. So from the top we have 3 moves down, 3 moves up, so A, B, C. Yeah, this could be E here, and we go on up. So I have a 300 fib here, so maybe we move up to 150.14, come back to retest this triangle, and then I would say we are heading to the top of the bigger triangle. Label these in green. And let's move to the Micro E Minis to finish the weekly Pitchfork edition. Okay, let's move out to the 4-hour time frame. You can see on the shift we need to switch it to the modified. We have an A and a B. I'm predicting a triangle pattern here, A, B, C, D, E. A retracement down to what is that? 57.75. Let me get rid of some of this stuff here. I can't read my own chart. So really, this is tricky because the triangle is in an ascending manner with increasing price. It could mess our retracement up. We'll go ahead and start at the top, pretty much where we're at, and we'll say the 23. This is pretty much identical to the last video. As far as the retracements, 23.6 at 59.82, 38.2 at 57.69, 50 at 55.94, and finally the 61.8 at 54.15. I don't think it's going to, well, no, I better not say that. So anyways, let's zoom into the 30-minute time frame and see where we're at in regards to the Pitchfork. We are on the bottom side. This is the median here, so we're on the bottom side of the Pitchfork. We can have a couple things going on right here, but let's just focus. Let's read the chart right to left and just focus on the move that's in front of us. I know people would say that this is a triangle, A, B, C, D, E, and you can't have that start the wave, and that's correct. But there are times that you just can't count the wicks because there's so many alternative patterns that could be played here. This is 30-minute time frame, by the way, too. So we could have expanding flats that could simulate these triangle moves. So I've got this just labeled as A, B here. So this is the actual triangle. Okay, an A, B, C, D, E here, and then up in C. Now the question is this correction complete and we're moving it, making another leg higher, or do we need another 1, 2, 3, another swing down to make a C leg down? Because the correction is right on the 38.2. So it could go either way. Honestly, I think we need to go higher. And it's a pretty bad trade right here because there's no, the stop loss is 30 points difference each way. So we're at 63.35, and if we went short, our stop loss is at 63.56. If we went long, our stop loss is at 63.23. So there's probably still better case scenario trade for the long. You're splitting hairs. So maybe I would wait for just a minute correction and go long and have the stop loss at 63.23, or wait till it gets back up to here at 63.55 and try to go short one more time. But I honestly think if it's going to go up here, it's, because the retracement from this leg is showing me a deeper correction here already. So it's telling me that even with this correction, maybe we go to the 63.45 and we form some kind of triangle here. That's one case. And then with that triangle, we go here and break down to there. So that's the bear scenario. And from here, the bull scenario would be continue higher highs and higher lows until it gets to here. Small pullback to test, correct that move. And then we're going to the pitchfork. Label that in green. All right. So, just to recap, this is New Wave Theory Counts using Andrew's pitchfork to help us with the trend. So right now we are outside the pitchfork, which is bearish. We need a move either down to confirm our downtrend or up to finish our move up. All right. We don't have much higher to go if we do go any higher. Let's zoom out on the 4-hour time frame real quick and make sure we see. Let's clean this up just a little bit. So our long-term target is measured from here. Let's zoom in and make sure we get this a little more accurate. Alright, let's zoom back out and see what that gave us. So it gave us the 261.8 and the 300. So these two still have to get hit if we go higher. There's nothing really in between that's real common. So yeah, maybe we go up, hit that bottom of the pitchfork, just throw everybody off, then come down to correct. And then, because I think that the move is above the 200 fib. So it looks like we want to go to the 261.8. So it looks like we want to go higher. And maybe we just ride along the bottom of the pitchfork. Let me get rid of this real quick and draw one last trend line here in green right just underneath it. We'll follow that, but I probably won't do any more videos until the move. Maybe when the move has happened complete, then we'll go back over and analyze it and see if the pitchfork actually helped us out or not. Okay. So anyways, I think that's it for today, and I hope that helps. And until